Welcome back. You're still tuned into Power Breakfast. Well, we spoke about what the Fed rate decision was, how it impacted the US markets. But of course, let's talk about how it will impact our own markets. We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, first up to you. What is the impact on our own markets?
Well, good morning. It's expected to be quite a soft opening as far as the Indian markets are concerned. Like you rightly mentioned, most of the US markets ended quite deep in the red after seeing such a sharp spike up, immediately post the rate hike decision. Now, when you're talking about, the comments, main problem was that as far as equity markets were concerned is that the commentary that the terminal rate hike is going to be likely higher than anticipated has actually set equity markets into a tailspin downwards. Now, when you're talking about the European markets, most of the European markets, closed just before the decision, and which is why, while they ended lower, when you're talking about European markets, they still haven't seen the kind of deep cuts that the US markets saw. Gold prices fell down marginally once again, and when you're talking about crude oil prices, however, went up, and when you're talking about Brent as well as WTI crude, both went higher by close to 1% in yesterday's trading session. Key events today to keep an eye out for as far as Indian markets are concerned continues to be Q2 results. When you're talking about some of the key results, HDFC, Adani Enterprises, Hero Moto, HPCL, and also SRF amongst the larger mid-caps are the ones that will be declaring the results. Most of the Asian markets are indicating a very soft opening, and in fact, the SGX Nifty 2 is indicating quite a deep gap down opening as far as Indian markets are concerned.
Okay, all right, Vivek, thank you so much for all those cues. Surbhi is joining us now. A lot of stocks in focus as well. Surbhi, over to you.
Few stocks that are on my radar today. The first one is M&M Financial, where the operating profit has come weaker at 864 crores. The gross NPA ratio is lowest in 14 quarters at 6.7%. The net NPA ratio is lowest in 29 quarters at 2.91%. Dalmia Bharat, where the revenues come in at 2971 crores, the EBITDA is coming at 377 crores, and the margins have come in at 13%. Next is Triveni Turbine, where the revenue is up 42%, the EBITDA is up 39%. Margins have come in at 23%, and the order book for the first half stands at 719 crores. The board has also approved a buyback of 190 crores for 350 rupees per share. Next is Relaxo, where the revenue is down 6.3%, margins are down 748 basis points, and the PAT is down 67.4%. MTAR, where the revenue is up 38% and the EBITDA is up 19%. JK Paper, where the revenue is up 74% and the EBITDA is up 146% on a year-on-year basis. Lastly, JK Cement starts operations in its Madhya Pradesh unit. Few other stocks that will be on our radar today, as they're going to announce their Q2 results, are HDFC, Hero Motocorp, and SRF.
Okay, all right. Surbhi, thank you so much for that list. Let's talk about the F&O space now. Today is the weekly expiry as well. Mangnam is joining us with all those cues. Good morning, Mangnam.
Good morning. The SGX Nifty is indicating a very sharp downtick as we open, closer to that sub 18,000 mark at a spot level. In fact, even at the futures level, now it's down almost 175 odd points. And that will be extremely important to watch out for, primarily because yesterday, ahead of the Fed meeting, the FIs lightened their positions in the F&O space. They unwound close to around 10,000 longs in index futures. They unwound around 28,000 long calls in index futures, so perhaps did not want to keep any positions open. Importantly, a lot of the short positions also, both calls as well as the puts, were unwound, and at the same time they sought some protection, so they've bought around 11,000 long puts. So to that extent, it will be extremely crucial to watch out for the first hour low in today's trading session. FI has bought around 1,400 crores in the cash market, but remember, this was yesterday ahead of the Fed meeting and the Fed announcement. So this is another trend that we'll be watching out for. It is weekly options expiry, and the game today will be that of the 18,000 put, which is the maximum open interest, 76 lakh shares outstanding at a premium of around 40 odd rupees. So that's telling you that, the street is expecting that there could be some support just below that 18,000 mark. But if that doesn't happen, unwinding by those put writers could lead to further sell-off, and we'll perhaps then be testing that 17,750 to 17,800 zone, which was earlier a congestion and now perhaps maybe a bit of a support. If not, then perhaps we go all the way down to the 20 and the 50-day moving averages. 17,500 thereabouts will be an important level to watch out for. The Nifty futures premium to the spot is around 64 odd points. Usually this is unsustainable, so that is something we'll be watching out for as well. Usually settles around the 35-40 odd points. And the Nifty bank as well, 41,000 put has the maximum open interest premium at 150 rupees. So there would be some unwinding on those short put writers as well. So there could be further weakness. But all in all, how do you approach trade? Look at the first hour low, and if we see any sustained movement below the first hour low, then there could be further unwinding. Else there could be some bit of relief.
Okay, all right. Mangnam, thank you so much for all those cues and facts. Surbi, Vivek and Mangnam, thanks a lot for joining us today. With that, we talk about the RBI's Monetary Policy Committee meet, which will be meeting today to discuss its failure to meet the inflation mandate. Remember, inflation has remained above targeted 2 to 6% band for 3 consecutive quarters now. And after the special meeting, the central bank will write to the government explaining the reasons for missing the target and the measures it is taking to remedy the same. On that note, let's listen into what Governor Shaktikanta Das had to say about the inflation challenge on the sidelines of the FICCI IBA Banking Summit yesterday.
We are in a situation where, the inflation has remained above 6% for 3 consecutive quarters, and under the accountability norms which are provided in the Reserve Bank of India Act, we are expected to send a report to the government explaining explaining as to why it happened, what measures we propose to take, and by which time we expect inflation to come within the target range of 2 to 6% and closer to 4%.
All right, time to slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned.
Global Health Limited,